Okay. Okay, class. So, good morning, good afternoon, and good evening, depending on what time you're viewing this lecture. So, previously, as we always do, I would review you. So, ano ba ang na-discuss natin before you had your midterms? So, we discussed about the liquidity ratios. So, what are liquidity ratios as a review? So, based on our discussion, so liquidity ratios measures the what? The short-term debt paying ability of a company. So, as we have discussed, liquidity ratios are comprised of two ratios, no? So, may dalawang formula pa. Ito yung current ratio and the acid test or the quick ratio. So, again, the first formula under liquidity ratio that we have discussed is the current ratio, and the second formula that is under liquidity ratio is acid test or quick ratio. So, what is again current ratio? So, it measures the short-term debt paying ability. So, ito yung current assets that is to be divided by current liabilities. So, dito hindi natin masyado tinitake into account kung ano-ano yung um, nakapaloob sa ating current assets. But with the acid test or the quick ratio, so our formula would be cash plus marketable securities plus accounts receivable divided by current liabilities. So anong goal naman or purpose ng ating acid test or quick ratio? So this measures the immediate short-term liquidity of the company. So as you may be able to realize, no, inventory and prepaid expenses are not part of the acid test or quick ratio. So why? Ang reason natin is yung liquidity is yung prepaid expenses. So we already prepaid those expenses before actually incurring it. Therefore, because the seller does not have any liability from us if we are able to um, actually use it or not. So, upon passage of time, marirealize kasi yung prepaid expenses. So, hindi siya considered na liquid. Okay? Kasi walang assurance na ibabalik ni seller ang ating binayad. What about inventory? So, inventory is set aside or it's not included in the formula. Why? Because we are also not sure if we are really able to sell those inventories in time upon liquidation, no? Upon payment of the short-term liabilities with our creditors. Okay, so those are some of the topics that we have discussed before now. So, ngayon, ano naman ang i-discuss natin ngayon? We will be discussing about asset management ratios or also called activity ratios. So, this measures the efficiency of conduct of business activity. So, in other terms, this measures how the firm uses its assets to generate revenue and income. Okay, so in other words, paano nga ba? Ano ba ang ibig sabihin ng asset management ratio? So, ito lang yung on how the company or the entity utilize its assets to further maximize its profit or sales. Okay? So, paano ba nangyayari? So, i-diagram natin. Ito hindi to conversion cycle. This is called operating cycle. Okay. Delete muna natin to. Okay. So, as a business, what is our goal? Our goal is to earn a profit. And eventually, our goal would be on how to maximize our profit and minimize our costs. So, as a business entity, how do we generate income? We first have cash. We invest our cash by what? By buying inventory. And then, eventually, this inventory would be sold. This would turn into cost of goods sold, and we will now generate sales. Okay? So, once we generate sales, not all sales class is cash sales. Sometimes, we, what? We, on our part, and as an effort to encourage customers to buy our products, we enable them to pay on credit. So, some would be cash sales and some would be, wait, let us expound on our diagram. Okay. Some would be cash sales, while others would be what? Credit sales. Okay. Credit sales. So, ito yung ating ina-analyze. Yung credit sales part. Because if we enable our customers to pay on credit, then we will be having accounts receivable. So, and we must be able to collect it timely so that we are able again to convert this accounts receivable into cash. So, how again is our operating cycle? We have cash. We invest our cash by buying inventory. And then, once we have our inventory, we will sell it. And eventually, this inventory would be converted into sales. It would generate sales. Wait, let me charge my computer. So, after generating sales, what happens? Since we want to generate more sales, and we do it by allowing our customers to purchase on credit, we will have an accounts receivable from our customers. So, we must what? We must collect it so that we are able to convert this accounts receivable into cash. Okay? So, delete din natin to. Okay. So, our first formula is accounts receivable turnover. So, what is accounts receivable turnover? So, accounts receivable turnover measures the number of times in a year that receivables were collected. Again, that number of times in a year that receivables were collected. So, ayun, yung asset management ratios pala, under it has four formulas, no? But all of these formulas are interconnected, and when we look into it, these form parts, this is called what? The operating cycle. Okay? So, let us first discuss R2 or the accounts receivable turnover. So, ano ang sabi sa formula? Our formula is net credit sales divided by average accounts receivable. Okay, so we must first identify net credit sales. So in our problem here, in our the information that was given to us, anong sabi? So sales 20% cash, 80% credit sales. So this might be what? The 100% sales. So this comprise of cash sales and credit sales. So sabi, dapat net credit sales, and therefore dapat yung 80% lang ang ating kukunin. So 18 18,400,000 multiplied by 80%. Oops, sorry. 80%. Because the 80% pertains to what? The credit sales. So, this is our oops. This is our mhm. This is our net credit sales. Okay. So, this is our net credit sales. So we have successfully identified net credit sales, right? So let us now highlight this. Okay. The second information that we must be able to obtain or solve for is the average accounts receivable. So, how do we find the average accounts receivable? So, take note of this formula. So, average AR is the um, accounts receivable beginning, and then we will add accounts receivable accounts receivable AR ending, and then i-divide lang natin siya by 2. Let's just center this. Okay. So, average AR would be accounts receivable beginning plus accounts receivable ending divided by 2. So, this is our average accounts receivable. Average accounts receivable. Okay. So, we now have the two informations that should form part our formula. So, we have completed the needed information. So, we will now solve for accounts receivable turnover. So, simply lift the amounts 14,720,000 as credit sales to be divided by what? Average accounts receivable. Again, average accounts receivable is average accounts receivable beginning plus accounts receivable ending divided by 2. Okay, and that is 800,000. Okay, wait lang. So, ayun. We have now completed the given. So, let us now solve for R2 or the average account, or the average, the accounts receivable turnover. So, 14,720 divided by 800,000, it would be 18.4 times. So, 18.4 times in a year, we were able to collect our receivable. So, let us highlight this. This is our final answer. Okay. So, if we have our AR10 turnover, then we should have also our average collection period. So, what is the average collection period? So, let us define it. So, average collection period measures the average number of days that receivables were collected. So, there are two formulas for it. The first formula is more conservative. It uses 365 days as compared with the non-conservative formula, which is 360 days. So, if in our examination, no answers were being generated with this formula, with our conservative formula, then I suggest that we try using the 360 days divided by the accounts receivable turnover. Okay, so let's now solve. So, ayun, 'di ba? Sabi ko kanina, um connected ang ating AR turnover and our average collection period. So, okay. So, 365 days, we just have to divide it by R2. So again, as a review, no, let's solve for R2. So what is accounts receivable turnover? So as ano pala, as a tip, no, kapag turnover formula, kung ano yung preceding niya, siya yung nasa ilalim. So in this, for example, in accounts receivable turnover, ano yan, sa ilalim, si accounts receivable. Parang tiniturn mo over si accounts receivable. So, para lang mas madali nyong maalala. Kasi medyo marami tayong formula. So, just take note that this is not just AR, no? This is average accounts receivable. Okay? So, this is average accounts receivable. And, ano yung nasa taas natin? 365 days. Okay. So, no. Average accounts receivable. This should be what? This should be net credit sales. Sorry. My bad. Net credit sales. As a review nga pala. Ang R2 natin. Accounts receivable turnover. So, we have solved it before. Net credit sales should be 18.4 million to be multiplied by 80% because 80% pertains to the credit sales. And then we just have to divide it by what? By average accounts receivable. How do we compute for the average accounts receivable? We just add 400,000, which is the ending balance, and the beginning balance is 1.2 divided by 2. So, 18.4 million number. Okay. 18.40 times in a year. So, now we have our R2. Our accounts receivable turnover. So, since we are able to identify our accounts receivable turnover, then we may now solve for average collection period. So, what is our average collection period? So, using the conservative formula, 365 days divided by 18.40. Oops. Kasi 18.40 yung accounts receivable turnover natin. So, 19.84 days. So, we are able to convert our AR. What is the average number of days that we are able to collect or to convert our accounts receivable? It is 19.84 times or 19.84 days. So, ito yung using 365 days. So, what about if we use 360 days? So, this is yung 365 days. Ito yung medyo conservative na formula. So, using 360 days. So, we just use 360 days divided by our accounts receivable turnover, which is 18.40. Then, we're able to collect daw 19.57 days average. So, mas mabilis siya as compared with using 365 days. So, again, if ever in the examination, I suggest if there's no answer, try using 360 days. So, this is our average collection period. What is again the goal? It measures the average number of days that receivables were collected. Kasi nga, dun sa ating diagram, ito yun eh. Number of times or days na mako-convert natin si accounts receivable into cash. Okay? So, the next formula would be inventory turnover. Okay, so what is inventory turnover? What is its definition? So, inventory turnover measures the number of times in a year that inventories were sold. So, ano daw? Ito daw yung number of times na nakakabenta daw tayo ng inventories natin within 1 year. So, tingnan natin yung diagram. So, 'di ba? Yung inventory natin, anong goal natin? Ma-convert siya into sales. Pag naging sales na ang ating inventory, anong tawag sa kanya? Cost of goods sold. Okay. So, number of times in a year that inventories were sold. So, ano naman ang kanyang formula? So, the formula for inventory turnover is cost of goods sold divided by average inventory. So, average inventory na naman. So, katulad ng average accounts receivable, ang ating average inventory would be inventory beginning plus inventory ending, then divide lang natin sa divide lang natin sa 2. So, divided by 2. Okay. So, yun ang ating average inventory. So, in our problem here, the information given, so binigay naman yung ating cost of goods sold. So, let's try using itong 2000B because it is the current year. So, cost of goods, COGS, cost of goods sold. Ano daw siya? 8 million. And then, yung average inventory naman natin. Ating average inventory. Okay, so what is our average inventory? Inventory beginning, so ito, 2,000A plus inventory ending, 2,000B, 720,000. And then we just divide it by 2. That is how we average it. Wait lang. Okay. So, since we have accomplished, we were successful in identifying the parts of our formula, then I think we may now be able to solve for the inventory turnover. So again, it is a number of times in a year that inventories were sold. So, ating ito would be average inventory divided by cost of goods sold divided by average inventory. So, 8.33 times. Okay. So, yun ang ating inventory turnover. So, this is our final answer. So, sure na. So, what about the average sales period? So, alam niyo na, nakailang take ako kasi may answer na. Hindi, umuubo kasi ako dun sa isa. Parang may something sa lalamunan. Anyway, so average sales period. So, anong definition niya? Measures the average number of days that inventories were sold. So, if inventory turnover measures the number of times that an inventory is sold in a year, so ito naman, it is the average number of days before inventories are being sold. So, ano pagkakaiba? Ito kasi, ito yung average number of days bago tayo makabenta ng inventory. While yung inventory turnover, it is yung number of times na nakakabenta tayo ng inventory in a year. So, ito yung days, number of days bago tayo makabenta ng inventory. So, katulad ng average collection period, there are also two types of formula. The formula that uses a conservative approach, which is 365 days, and the other formula, which is 360 days only. Okay? Okay, so let us now solve for inventory turnover first. Kasi need natin yon. Pero na-solve naman natin siya kanina. Gusto lang natin ma-review tayo, di ba? So, same information pa rin naman. Okay, so inventory turnover. How do we solve for inventory turnover? First, we should have our cost of goods sold. Our cost of goods sold is 8 million. And then, we will divide it with our average inventory. So, inventory beginning plus inventory ending divided by 2, that is 8.33. So, ito yung ating inventory turnover. Okay? So, solve na natin. So, we will now be using the conservative approach in solving our average sales period. Average sales period. Okay, so average sales period. When using the conservative approach, syempre ginagamit natin 365 days and then i-divide lang natin si inventory turnover which is 8.33. Sir, what if naman gusto ko gamitin natin yung non-conservative? Okay, na-use natin si 360 days. So, divided by 8.33 pa rin. So, days lang yung nababago. So, let's solve. 365 days divided by the inventory turnover, 8.33 times. So, 43.80 days ang ating average sales period. So, before natin mabenta ang inventory, it would take 43.80 days. Highlight natin. Ay, ito pala muna. What about yung non-conservative? So, 360 days and then we just have to divide it by 8.33. So, mas mabilis. 43.20 times, 43.20 days before we are able to convert our inventories into sales. So, bago tayo makabenta, it would take us 43.20 days. So, ito class, ang ating activity ratios or asset management ratios. So, isa na lang. Sabi ko kanina, we have our operating cycle. So, it is the conversion of inventories to sales and then accounts receivable to cash. So, paano yun? E di, ano lang natin, kapag inad natin si average collection period, so, operating cycle. So, may formula rin siya. If we will add average collection period plus average sales period, it would equal to operating cycle. So, average age of inventories plus average age of receivables. So, ano namang goal nito? So, this measures the average number of days So, this measure sorry. Natin lang. Positive. This measures the number of days to convert inventories to cash. So, yung whole cycle na, no? So, to cash. Okay. So, yung whole cycle na, no? From inventory all the way to cash. So, magagawa ba natin? I think yes, no? Magagawa natin. since we have our average collection period of what? Using 365 days lang, 9.84 plus 43.80. So, 19.84 plus 43.80. So, tama ba? Collection period is 19.84 tapos 43.80 yung sa average sales period. So, collection period plus sales period, ito yung total operating cycle, which is 63.64 days. So, anong analysis natin dito? So, before natin maikot yung cycle, it would take us 63.84. Okay? So, sa inventory natin, bago natin siya ma-convert to sales, ilang days? 43.80 days bago tayo makabenta. And then, bago tayo makakolekta, it takes us 19.84 days. So, it would take us 63.64 days in total before we complete the operating cycle. So, that is our asset management ratios or the activity ratios. So, again, this measures the efficiency of the conduct of business or measures how the firm uses its assets to generate revenue and income. So, in other words, ito yung utilization ng company, proper use niya sa kanyang assets in order to generate sales, ultimately cash, and to maximize profit. So, yun lang class. Thank you.